Well, I thought I would make a quick video before I went to bed. It's actually not terribly long, and I don't think my insights will be spectacular, but I did think it was really interesting, and it focuses on a topic that I guess you don't hear about too much, and that is stocks in the S&P 500 that are still negative since the pandemic lows. So um, this is a chart right here. I think there are more than 8 names here. But if you look at percent change since the depth of the COVID crash or COVID inspired crash in 2020, not all of them are actually negative. Let's see, Netflix, Intel, Verizon, Campbell, they're all above 0%. Well, 0% on the lows. It's not a very high bar. That's because this article was written yesterday morning, and I guess the market, or no, I guess it was published 2 days ago, March 25th, um, and in the evening. So the market's gone up a little bit since then. But anyway, um, even if you look at total return, the picture gets a little bit better. But yeah, let's read real quick. So um, yeah, so recently I've been doing a lot more research on Intel, and I think I'll culminate that uh, in a little bit. I've been reading the articles by Ben Thompson about Intel and their split, but that's a story for a different time. Um, let's see. Yeah, so this is kind of crazy. More than half the components of the S&P 500 have doubled since that date. The mean price change for shares in the index is 133%. Of course, a lot of that's powered by the top couple of companies. The S&P 500 is really top heavy now. Um, and actually, history shows that when the S&P 500 does get top heavy, where the components were the top uh, like I don't know, top five components each make up like 5% of the index. Returns for the next 5 years are actually below average. And actually, I'm curious. Skip ahead a little bit. Just pull up VU and look at holdings real quick. Um, so, of course, Apple is going to be at the top, followed by Microsoft, and then Google has their two share classes. Okay, so Apple, yeah, 7% almost. Microsoft 6. Amazon's 3.6. Gotta add Alphabet's 2 share classes together, so that's more than 4%. Tesla, 2%. That's incredible. And then I guess it tapers off. So top five holdings, they're I guess not all 5% or more. Well, but anyway, just what I read about S&P 500 being top heavy, not being good for returns. Uh, this may hold going forward. Although of course that the paradigm of the market is different now. These companies at the top are nimble. They have more opportunities to grow. Technology is inherently deflationary, so their total addressable market, if you could call it that, is bigger than GE's or Exxon's, for example. But back to the story. So so Barron's makes it seem like Intel just left an exclusive club, and that makes it seem like a bad thing. Well, or I guess it makes the exclusive club seem like a good thing, but this exclusive club, as you know, are the stocks that are still negative since the pandemic low. So definitely not a very high bar to reach. Um, so first off the list, off 30% of its low is Viatris. Um, Viatris was a spin out from Pfizer. Actually, it's actually wasn't even a public company at the time. It was the firm was named Mylan, and then it merged with Pfizer's Upjohn business. But I know if you're a Pfizer shareholder, you got it was like a spin out. You got some shares of Viatris for every share of um, Pfizer that you had. So I'm guessing uh, Pfizer spun out Upjohn, which got merged with Mylan to form Viatris. I have no idea how what this company does. Um, Pharma and biotech is a little bit out of my circle of competence. Um, but is there value in this? Maybe. I don't know. It pays dividend. That's why there's a delta here. Um, where it gets a little more interesting is Clorox. So, so why is Clorox down 20%? And it's actually really interesting because Clorox, this was it spiked at the very beginning of March, and then this is quote unquote its March lows, and then it's basically really no dip. It looks like a Zoomer or Teladoc um, hit its high. It's 52 week high anymore, but close to like 240 almost, and now it's at 136. So what's happening with Clorox? Well, let's see. If you go to financials, um, uh, this I thought this was interesting. Of course, I didn't do that much research, but for 2020, it made like 6.7 billion in revenue, um, and that ended up with 1.2 billion in operating income, and then let's see, net income of almost a billion. And then you look at 2021, and we can look at TTM as well. Um, Revenue has increased for the past 12 months. It looks like it's decreased. Um, Operating income decreased even more so. Uh, and then look on the net income in the past 12 months looks really ugly. So what's causing it? Well, the top line's not accelerating or is not growing. That's one, but uh, Clorox is getting taking a hit on the margins. So let's see, was this the article? Oh no, that's the financials. We just saw that. Um, is one of these I was reading. Yeah, margins are under pressure. So I mean, if you think about what Clorox makes as their products, um, their I don't know, the wet wipes, the bleach, and a bunch of household cleaning materials, and that's not exactly something that's defensible. I mean, brand matters. That's very important. And for CPG companies, brand is how you can build customer loyalty and therefore moat over time. But if you go to Kroger and see the sanitation wipes and they're $1 cheaper than the Clorox ones, and I think for a lot of people will say, oh, it's fine, it's fine. Um, so. So yeah, we'll continue to take a hit from cost pressures. It's definitely not immune from cost inflation, and I don't think the labor situation is helping not Pfizer, Clorox either. Um, and I don't think their pricing power is um, as strong as like a software company, for example. And they're a manufacturer. They're not excuse me, they're a manufacturer. They don't necessarily choose where on the shelf their products go. So they can go. So Kroger could put their wipes on like an aisle cap, while Clorox's could be at the bottom or very top of the aisle. So it's um, not an enviable position. We can say, but Morningstar says Clorox is in 4-star territory, gives it a fair value of 161. Uncertainty is low. That's the best rating that Morningstar gives. Let's see, look at price to fair value, and actually hasn't changed too much. Definitely uh, was the highest around 171. it's been pretty stable around 161 so far. But this chart is, up and to the right, slow, steady compounder. Um, but it looks like Clorox is very rarely in quote unquote like fair value territory. It's finally coming in. So um, for patient investors, I think Clorox does have some potential. Um, in terms of the next couple of companies, Biogen and Gilead Sciences. So, actually, you know what? There's actually this is not too useful. So Biogen had a drug that got FDA approval for Alzheimer's. It's called Aduhelm. So the story behind that was they actually went through a series of clinical trials, and um, I believe actually they didn't show the drug was effective. It's like patients who took Aduhelm fared no better than those in the control group. However, um, when Biogen went back and looked at the data a second time, they saw some data point that made it seem like there was a possibility that their drug actually was more efficacious. So normally that wouldn't pass and get FDA approval, but from my understanding is that the FDA took a look at the situation and said, well, for current Alzheimer's patients, your choice is nothing. But if you want, you can take their drug Aduhelm, and uh, and that way you can feel like you have some agency. Um, but I don't exactly think that's uh, done great. I don't know. I, I don't know exactly, but I mean, the stock is super volatile. You have times where it drops 30, 40%, and it spikes up. And that was the case with when Aduhelm was approved. So I don't think you want to short the stock. You might get margin called pretty fast. Um, yeah, it's it's a wild ride, we can say for sure. Um, I don't know biotech that well. Gilead, let's see. There was some optimism with regards to its COVID-19 treatment called remdesivir, and then I guess investors have sold off the stock, but they're looking forward to trial updates for its breast cancer drug, um, tro trodelvy, trodelvy. I don't know. Citrix is an interesting story. Let's see. Oh yeah, yeah. So Citrix is has have fallen quite a bit. Actually, it rebounded. Um, so it rebounded actually quite handsomely, and then there's a big sell-off. Don't know why. It's probably earnings or something. I mean, Citrix hasn't been a great investment over the past number of years. I guess if you go back to 2015, um, up here you're doing pretty well, but uh, if you held until now, past 5 years, it's not been a been a great. I didn't lose money, but anyway, so um, funny thing is they're getting bought up by Elliott Management and Vista Equity Partners, so they're getting taken private. Interesting thing is they got taken private at a like 30% premium, but it was definitely not a premium to their high. No, on the contrary, it's they're getting taken premium, getting taken private at below the lowest point they were in March of 2020. It's actually very sad. Um, yeah, uh, yeah, pretty sad. But like I mentioned earlier, it's not been a great company. They own one company called LogMeIn, which makes a product called LastPass, which I do use, but Keychain, the Keychain Access is what I'm using now. I don't know. LastPass lost to 1Password, all of the other password management apps, and I think they had a great head start. Um, anyway, moving down the list, so AT&T, interesting story because they're going to spin out their media assets and merge it with Discovery. Um, I think value play definitely. If you uh, there's definitely potential there. I not too interested. Um, I was looking at it earlier. See this one, yeah. So actually, I didn't read this article, but let's see. So for every share of AT&T, you'll get 0.24 shares of Warner Bros. Discovery, which will be the new entity. It used to be called Wim Bill Dan Foods, OJSC. It must be a micro cap. Oh, it's defunct now. Oh, oh, did Pepsi buy them? Huh, weird. I don't know. Anyway, so uh, AT&T is going to cut its normal dividend, but management did say it's going to be still one of the higher yielding stocks in the Fortune 500 and S&P, or no, in the United States, they said. Um, so personally, I'm not too interested in AT&T. Although next company we'll talk about, actually we have to jump down a little bit. Verizon um, could be more of a value. Uh, and actually, yeah, I'll just skip down to Verizon for continuity. So I guess they don't talk about Verizon. Uh, anyway, so Verizon is just not done too well. And both Verizon and AT&T are bidding for the for like 5G spectrum. It's and building out 5G capabilities. And I mean, Verizon's definitely not beat the market over the past 5 years. It was $51 in the depths. Yeah, I just call it 51. So it's down like 1%. Um, Interesting thing is Buffett has been buying a lot of Verizon. This was last year, July 2021, when he um, revealed this big stake, nearly 150 million shares. Interestingly, um, that's actually now like what 2.5% of his portfolio, of our Berkshire's portfolio. Um, you know, Recently, we've been seeing news about Chevron and Oxy purchases. Oxy purchase was like a fury. People were saying, $5 billion, huge. But Verizon is nearly is a more than $8 billion stake. Verizon is a bigger stake than Oxy and Chevron, not combined, but almost. Um, of course, the Berkshire portfolio is extremely top heavy. The top four companies make up what's that? That's 60, 75 percent of the portfolios in four companies on the equity side, at least. Um, I think Verizon um, is interesting value play. Definitely could warrant some more research, and I don't think the valuation's crazy. I mean, for one, you have Buffett um, who bought in, and Buffett doesn't overpay. This is the price in July 2021. Well, it must feel bad for it to go down another 10% after Buffett buys. I don't know. Everything he touches turns into gold. It's what's a Buffett effect? Some people say, and even a big dip actually year to date uh, hasn't been great, but uh, I mean down 5, 6, 7%. I just don't see how we'll take it. Um, see, so Las Vegas Sands. Um, uh, don't know too much about it, but I know they did fall potentially due to um, China shutting down casinos in Macau, something like that. I do own one company called Caesars Entertainment. It's a casino as well. Uh, Granted, I definitely should have done more research, but this was a company that I bought um, when it was still Eldorado Resorts, and I bought um, cheaper, and I've just held on ever since. This company has done much uh, has fared better than Las Vegas Sands, and Caesars joined the S&P 500 along with Penn National Gaming back last year, or maybe it was 2020. I can't remember for sure. FIS, Fidelity National Information Services. Let's see, FIS. I got that pulled up here. Morningstar has a 5-star rating on it and $135 fair value. I think FIS is not too unique in its sell-off. I mean, you have companies like Global Payments and Fiserv, both acquires, which I don't understand too well right now, but I'm learning about the merchant networks and acquires and the value chain in the credit card system because I'm looking into a company called Marqeta, but maybe I'll make a video on that eventually. But Global Payments, Fiserv, FIS, all long-term winners. But look at like a Global Payment in the past year down 35%, and that's like a SaaS stock. Its low was 116, and it basically touched that. It's not too much about that right now even. Look at like Fiserv, all very high quality companies. Like Fiserv, like, oh, this is smooth as can be. It's just been rocky recently. Also down quite a bit. Not below its COVID levels, but Fidelity National Information Services definitely is FIS. No relation to Fidelity, the brokerage, I don't believe, but yeah, that has to hurt. It looks even, I don't know, I wonder if this is worse than T Rowe. T Rowe is in the S&P 500, pretty sure. Yeah, oh, I guess it never got down as much as, it never went below, but I mean, T Rowe Price is one of the highest quality asset managers. I think, if I remember correctly, they had surprise outflow, and they don't provide guidance either. And let's see, I don't know. Technical folks may call this double bottom. I don't know. But let's see. Let's wrap up. Campbell Soup. I don't know. That's going to be low single-digit growth. I'm not too crazy about that. But Intel and Netflix. These two are interesting. So Intel, I'd really like to do more research on. It's one of those names that, it's one of these companies that could be an Apple, in my opinion. Actually, that's not even my opinion. That was from an article from a Substack article. But Intel trades at a very cheap valuation. It has new management from Pat Gelsinger, and it has a bunch of catalysts. I mean, you got the CHIPS Act in the United States, the CHIPS Act in Europe, and Intel is trying to build quite a few new fabs around the world. Let's see. Well, it's not below its 52-week, or it's not below its COVID lows anymore. But I mean, oh no, sorry, this is Netflix. Let's see. But I mean, yeah, let's look at Netflix real quick. So, it barely dipped, but now it's below its COVID levels, which is insane if you think about, like, because Netflix has been such a long-term winner. Understandable why it's below its COVID levels, and feel bad for the people who bought when it was trading in this range. I think it's understandable because streaming wars are heating up, and I mean, you have Discovery, Warner Bros, like we mentioned earlier, but also companies like Viacom who are trading at really cheap valuations and have good product, have good portfolios of content as well. So this will be interesting. Bill Ackman of Pershing Square Capital Management, one of the super investors I respect a lot. recently took a big position in Netflix, calling it a steal at these prices. Um, uh, and it's, if you're looking for a time to get Netflix, to build up a position, now is there have been worse times. Um, the funny thing with Netflix is their market cap is 160 billion. Of course, it used to be much higher, uh, probably even toppled 300 or 400 at one point. But people normally talk about the FANG companies. Well, before Meta changed its name, um, uh, and and Netflix was lumped in. Uh, uh, I think the adage goes that it was like a Jim Cramer CNBC thing, where he wanted a abbreviation for these companies that he just picked, um, and it's not in fact like a abbreviation for four most innovative tech companies that are the biggest. No, Netflix trails Amazon, Facebook, Apple, Microsoft, even though that's not in that bunch, by quite a large margin. And then, okay, so last but not least, we have Intel. Uh, what I what I think can be a multi-bagger from here. Um, it never reached its highs from the 2000 from the dot-com bubble, um, and back here it was uh, actually, so I'll talk about when I make a video on Intel, but Intel had to make a massive shift from from making memory disks, or memory chips, I should say. They're DRAM chips to um, to uh, not memory chips. What are not memory chips called? To like processors, like CPUs. Intel basically led the uh, movement to they basically enabled Moore's law for a number of years, and and until very recently, they were at the forefront of that. Um, Intel trades at exceptionally cheap valuations. Of course, the P ratios, just one indicator. You should build a model that discounts cash flows, and Intel is actually cash flow positive. I mean, they've been the only year they weren't profitable, or and free cash flow positive, I'm pretty sure, was the year where they made the shift, and that shift was under legendary CEO Andy Grove. Um, just look at their free cash flow first. Um, and so when Pat Gelsinger came into office, he said uh, he basically made a push to stop returning as much capital to shareholders, instead reinvesting in the business. Um, 30 billion. See, and then cash from investing. See, what's that most? Yeah, most of that's from capex. Um, see, 25 billion. And from financing, she issued some debt, paid back some debt, uh, paid some dividends. Okay, so they are, I guess, free cash flow even. See at the bottom, I think we can see, yeah, net change in cash. I guess, I guess this wouldn't be free cash flow positive, would be. Anyway, but some of this is artificial because it's from dividends paid. Although they did issue debt. But I think bottom line is, and of course, this is on a cash basis, and you do capitalize the capex uh, on the income statement. I think the numbers are a lot more beautiful. Um, Steady growth in revenue and gross profit as well. Going down the bottom, going down the income statement. Um, R&D spend has picked up. Looks like they took a big charge. Oh, that was in 2015 for depreciation. Um, let's see, and I mean, it's a very profitable company. Um, and companies who want data centers, who want processing power, are going to go with Intel. Uh, I'm learning about Adler Lake and how how Intel's chips are even though they've only made it to like I guess Intel 7 nanometer chips are actually like better than AMD's 5 nanometer chips, something like that. Okay, more details to come, but Intel and Netflix are definitely at the top of my list. Verizon may be something interesting to look at for a more conservative, value-leaning investor. But bottom line is, I think I guess I'm almost a little surprised there aren't more companies here. And of course, if you remove, uh, uh, and of course, if you looked at the list now, or I guess whenever you're viewing this, I think quite a few of these will have been removed as well. Um, but as of now, if I had to make a reckless prediction, not sure if I see um, well, Citrix will most likely never get back to its highs. But I think it's going to be a while until these get to their highs. AT&T probably as well. Don't know about, not educated enough on these, but Intel and Netflix. Here we go. Uh, Thank you, Barons, for a very interesting article. This was great, and thanks for watching. And I will go to bed. This small cap industrial stock is cheap and growing fast. Who are they talking about? Huh. I don't know about that. Okay. Peace. Good night.